The amount of homes being pushed into foreclosure went up 15% between January and June of 2023 compared to last year. Does that mean the housing crash is coming? That's what we're going to talk about in this video. I'm going to show you what's going on behind the headlines. Now, before I get into that, remember, I am a mortgage advisor and I can help you purchase real estate directly. If you ever want to schedule a strategy call with me one-on-one, click the link below. There's no cost, there's no obligation. I just want to make sure you always make the best decisions possible. Now, let's jump into this article. Adam Data puts out an article about halfway through the year to show how many foreclosures started in the beginning of the year from January to June. Well, this year for 2023, they're showing that foreclosure starts went up 15% compared to 2022. Here's the article. Foreclosure activity in the first half of 2023 ticks upwards toward pre-COVID levels. It sounds pretty scary, right? Since pre-COVID levels, meaning foreclosures are going up. The articles are always meant to scare us, and I don't understand why. This is what the media does. There's this push to keep people from buying real estate, or at least keep these people hoping that the market crashes. Maybe that's what it is. If the market crashes, we think home values go down and we can all afford them again. Well, it's misleading information, and I'm going to show you why. Let's dive deep into this article real quick. So the first thing I want to point out just from the graph is if this is 2023, and we can see there's 185,000 foreclosure starts, well, that's up from last year for sure, but look where we were before the pandemic. There was 296,000 foreclosures started in 2019. We're still 100,000 below that. So if the idea is that home values got pushed too high because of the low interest rates we saw in 2020 and 2021, it would make sense that we say, oh, foreclosures are going to get heavier because people can't afford homes. Well, the foreclosures are still less than they were in 2019. When we look at this data, what does it actually mean? Look at where foreclosures peaked. So if we go back, remember, 2008 housing crisis started. We peaked in foreclosures in 2010, and then they had been trending downward up through 2020 or 2019. And then 2020 and 2021 were anomalies. Don't forget what happened in 2020 and 2021. What did they do with student loans? They said you don't have to pay them, right? We're going to give people a break so we can all get through this. What did they do with mortgages? They started mortgage forbearance. You don't have to pay your mortgage. Let's get through this. What did they do with rent? They started the eviction moratoriums. Hey, landlords, you can't kick your tenants out because we're all trying to get through this. What did they do with foreclosures? They didn't allow foreclosures. Foreclosures had to come to a screeching halt because they didn't want people to get kicked out of their homes during a global pandemic, right? We forgot about that. We forget why these things are. We forget why the numbers were so low in 2020 and 2021. Now, bear in mind, they were trending down anyways, right? 2019 was the lowest we'd seen in the last 11 years, which would make you think that you're going to have an even lower number in 2020 and 2021 anyways. But I think the data got skewed because of what we were going through at that time. But why? Why have foreclosure numbers been going down since 2010? Every single year, they were lower and lower and lower. It's because people are building equity. As home values increase, people gain equity in their homes. So if they fall on hard times, they don't have to foreclose. They could just sell the property. So look at it this way. If somebody owned a home for $500,000 and they have a $400,000 mortgage, they have $100,000 in equity. They wouldn't need to foreclose on that property. They could just do a traditional sale, list it on the open market, somebody buys it, they take their proceeds, they'd probably walk away with cash in that situation. Now they have their down payment for their next purchase once they get into a better financial situation. Now, foreclosures are when you're upside down on a property. So let's take that same $500,000 home and say that they had a $550,000 mortgage. I don't know why, but somehow their home fell in value where no one else did. That would be where people would traditionally foreclose. I don't want to bring in extra money to close this house. I'm already in a bad enough situation. I'm going to give it back to the bank and I'm going to start over. Well, since 2010, values have been increasing. No one talks about this, right? All they talk about is the market's going to crash. The market's going to crash. But since 2010, values have been increasing, so people don't have to foreclose. And here's another article from Bloomberg from just 5 days ago that talks about this. Okay, so if we switch gears and come to this Bloomberg article, U.S. homeowner equity climbs to record highs. This is July 27th, just 5 days ago. The share of U.S. mortgage borrowers who are equity rich climbed to a new high last quarter as the housing market rebounded. Not last year, rebounded last quarter, meaning in 2023, values have already bottomed out and are starting to go back up. I personally saw this with the people I've helped buy homes from October to about mid-January, maybe even end of January, is when I saw the opportunity for home prices to go down or to negotiate credits and things like that. Since February on, On almost every single property, it's been multiple offers because there's just not enough inventory. There's not enough homes on the market to meet the demand of the market. Even with current interest rates, we're seeing multiple offers on just about every property. Let's go a little deeper into this article. Equity rich, I'm obviously not paying to read this article, so we're just going to get to what we need right here. Equity rich mortgages, those that have a loan to value ratio of 50% or lower, meaning the mortgage holder's equity stake is at least half of the properties, made up some 49% of the national total in the second quarter of this year. Almost 50% of the properties in America have 50% equity. So $1 million home has $500,000 of equity. A $200,000 home has $100,000 of equity. There's no reason for those people to foreclose. And that's almost half of the homes in America. So we're not going to see foreclosures. We're not going to see this huge spike in numbers. We're not going to see home prices crash. It's just not going to happen because, again, it's supply and demand. Even with current interest rates, we're seeing multiple offers on just about every property, at least for the clients that I'm working with. And as rates come down, you're going to see even more people jump back into the market because homes become more affordable with lower interest rates. So what should you do? Don't wait for a home market crash. It's not coming. What I think you should do is if you see a home that you like and you can afford the monthly payment and you can afford the cash out of pocket, you should buy that property because you're going to have an opportunity in the future to refinance and lower your monthly payment based on current interest rates. This is something I was talking about to someone the other day. I bought my house in 2021 with an interest rate in the 2s, and everyone says how lucky I am. Well, I bought at my max budget because I had to have this house, right? The same advice I'm giving you guys. I had to have this house. It's the perfect house for my family, and I'm going to be in it for a long time, and it's impossible to lose money. But it was my max monthly budget. There's no way for me to improve that because rates won't go lower than what I have. But anyone who buys today, we know rates will go lower. I don't know how low, but I can tell you that in the last 10 years, I've seen 4% 3 times, putting 2020 and 2021 to the side. 2012, 2016, and 2019, we saw interest rates at 4%. So if it happened 3 times in the last 10 years, what would make me think that won't happen again? I don't think we'll see 2s or 3s like we did because that was a one-time anomaly. But I do think we will get into the 4s, and I think we'll be into the 5s in the next 12 to 24 months. So if you see a house that you like right now and you can afford the monthly payment and you can afford the cash out of pocket, I think you should buy that house. You'll be able to refinance down the road and lower and improve your monthly payments and let everyone else fight over homes and drive your value higher. Whatever you think about this, comment below. Let me know what you think. Do you think I'm an idiot? Do you think I'm right? And why? Let me know what you think and let me know what else you want me to talk about so I can make sure that I'm answering the questions you have. Thank you guys so much. I'll talk to you soon. Cheers.